Hey everyone, what if I told you you can select your own interest rate for your mortgage? Overcome the fear and hesitation of high interest rates, stop paying those front loaded interests using traditional mortgages, lower your effective rate below 5%, and pay off that mortgage early in under 10 years without making extra payments or sacrificing your lifestyle. Does this sound too good to be true? Let me show you. My name is Sean Durr from Lux Realty. I'm going to introduce to you the all-in-one loan. Please like and subscribe to the channel, and my contact information is below. Let's look at some simple math. Did you know that a 3% interest rate paying over 30 years costs more than a 9% paying over 10 years? It's not the rate that's your enemy. It's the amount of time that you keep the loan and the loan balance. Let's take a look at this in a little bit more depth. A $100,000 loan, 6%, repaid over 30 years, cost you $115,000 in interest. A 3% interest rate costs you $51,776 in interest. So let's compare this. A 6% interest rate, but paid in 10 years, only costs $33,225 compared to the 3% paid over 30 years that cost you $51,776. Even at 8% repaid over 10 years, the loan only costs you $45,593, again, lower than the $51,776. So understanding this, we have to take in consideration of the three aspects. The rate, which I have explained, does not really affect it as much. It's the amount of time and the amount of loan. So by lessening that time and lowering that principal balance will lower your total cost. This is what the all-in-one loan does. It combines your home loan with your checking account that gives you 24/7 access through ATM or Visa. You'll get personal checks, online banking, mobile banking, all the client services you need. Your deposits will lower your balance and your expenses will increase. You can use your money for anything, for those weekly expenses such as groceries, entertainment, and dining, monthly such as those utilities, cell phone, cable, Wi-Fi, credit cards, car payments, quarterly, your medical and holiday expenses, insurance. Semi-annually, you got those property taxes and you go on those wonderful vacations. And then finally, annually, those income taxes. The all-in-one loan accelerates the paydown of principal, lowers monthly and lifetime interest without change in budget, without worrying or depending on lower rates. The rates will automatically lower for you as they come down. You'll have 24/7 access to your money at any time, and you never have to refinance again. Let's take an example here. Let's assume that we're buying a $500,000 home. We're putting 10% down, 30 years, with a 7.5% interest rate in today's market. Let's assume that you make $10,000 a month, $120,000 a year. Your household expenses only, meaning everything that you spend on a monthly basis, with the exception of rent or a mortgage. Let's assume that's $4,000. The results are, in a 30-year time frame, you would have spent $682,722 in interest plus principal of $450,000, giving you a total of $1,132,722. With the all-in-one loan, your interest was only $229,740 plus the principal. Total expense $679,740, thus saving you $452,982. Essentially, your effective rate was 2.96. That is the rate the 30-year would have had to have been in order to match the all-in-one loan. Let that sink in. When's the last time we've seen rates that low? It's been a while, and we do not know when it's going to come back to this. Let's look at the principal pay just in over 7 months. You've accumulated $15,265 in the all-in-one. In a traditional mortgage, only $2,382. After 55 months, which sometimes people sell their house at this time and buy another one, you would have accumulated $166,000 in the all-in-one loan. And in the traditional mortgage, you would have only accumulated $21,000. It's funny because most people don't even know what their mortgage balance is when they sell their home until they look at their statement and they say, my God, I still owe this much. I didn't even pay that much into my house yet. After 114 months, 9.5 years, your mortgage is done. You now have $450,000 balance in your checking account to use as you please. And if you were still in that 30-year mortgage, you would have only accumulated $55,282 in principal and still owe the bank $394,000. So we have effectively lowered your rate below 5%, saving hundreds of thousands of dollars in interest payments, paying off the mortgage in less than 10 years. Imagine that. You have access to your funds 24/7 to you as you like, bills, college, retirement, investments, vacations, etc. Your home is your checking account and the financial backbone to taking control of your finances. I want to thank you for listening to this presentation. Please remember that this information was for informational purposes only. Subscribe to the channel, and if you would like a personal consultation through Zoom or a phone call, my information is below. Take care.